Guys, after the formation of this candle on last Friday, it was very much clear that on Monday there will be a bullish reversal. Even if the S&P 500 want to go bearish, then also intraday it will give the bullish reversal, bullish movement, and if all goes well, then you might see okay a small bullish candle. But this the bullish reversal, it will be limited to what? It will be limited to 4425. Now a movement up to 4425 in the S&P 500, it was anticipated a little bit up down. But if there comes some news, okay, or some manipulation, in that case this movement can go to a maximum of 4446. And as soon as the S&P 500 it reaches to 4446, a little bit up down, then it will see heavy pressure, and because of that pressure it will come down. But one thing was very much clear, that no matter what, whether it is 4425 or 4412 or 4446, the S&P 500 will move up and it will come down. This will be the movement of the S&P 500. And this is my previous S&P 500 weekly technical analysis, and you can clearly see a reversal. It was there, it was confirmed, and then a fall. So what did not went as per our expectation? That the S&P 500 on Thursday it reached to 4458. So these the 12 points, only the 12 points. Okay, this is what we have missed. Okay, in the previous, this is the S&P 500 weekly technical analysis, because our movement beyond 4446, even in the manipulated case, it was not expected. But again we have seen a very heavy manipulation. Okay, and this was, and the reason was Nvidia was used as a cover to justify this the bullish movement, right? Anyways, so this the 12 points we have missed. Otherwise, okay, it moved up, came down as was anticipated, but still okay, it has not yet okay come down to these the levels. Okay, but that's not a problem. Okay, next week it will be coming down, it will be hitting these the levels. Okay, and so on. So guys, I have introduced these the two changes. And the very first change is that when you visit my website, then you will see that this is the daily S&P 500 updates and analysis. Now in this section, okay, you can read all of my updates that I've given to my Patreon community members. Okay, but these are not the real-time updates. These are just for your reference only. So once this the week is complete, then I will publish the updates of the previous week. Okay, and the other change is that this the 20 to 30% returns. Okay, in 1 year. Now the minimum capital requirement is $500,000. Okay, maximum is $5 million. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I'm going to discuss the agenda of this S&P 500 technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart, right? So as I mentioned that now there is a very significant change on the weekly chart, and that is supporting the bearish movement. Clear? Okay, so I will show you through the technicals. Okay, like what it is, okay, and how it is going to work. Other than that, weekly chart, as you know, that weekly chart means the big picture. Okay, what is going to happen in the near term, like in a quarter, a month, 3-4 months or so. Okay, that is the weekly chart, right? And one more thing, that now okay, whatever bullish support the S&P 500 was getting on this the weekly chart, okay, that bullish support is gone. Now the second point of the agenda is the Federal Reserve Chairman's hawkish speech. Okay, it was not dovish, it was hawkish. Okay, and the bearish movement and the recession. Okay, so yesterday on Friday, the Federal Reserve Chairman has confirmed okay a lot of things, including more rate hikes. Okay, and this is something that the Feds, they were not anticipating earlier, but because some strong economic data came, and Feds are still uncertain, things are not going okay as per their expectations. Okay, and they do not want to make the same mistake okay that was there back in 1979, okay. So they do not want to make this the same mistake. That is why okay the Federal Reserve Chairman has confirmed yesterday that if the things don't go okay as per the expectation, then there will be more rate hikes, not just one but more rate hikes. Okay, anyways, so recession, okay, and the bearish movement. So does it mean that now the entire stock market will just okay it will just go down and bearish movement okay day to day? No. Okay, that's not the case, because this thing will happen but not immediately. Okay, its impact will be seen but it's not immediate. Okay, anyways, we will just follow the technicals, and through the technicals we will come to know, okay, where the entire the US stock market is heading to. Okay, all of these things. Now the third point of the agenda is the S&P 500 technical analysis on the daily chart. Okay, so daily chart means the short term picture. Short term picture, like what is expected to happen, okay, in a few days or in a week, in 2 weeks, or maximum up to a month. Okay, for example, last week I mentioned that no matter what, on Monday there will be a green candle or there will be a bullish reversal. Okay, whatsoever be the case, and if the S&P 500 is able to sustain above 4396, in that case you will see a movement towards 4425. Okay, and then a maximum will be 4446. Okay, that's it. Yes, we have missed the 12 points. Okay, miss only 12 points. Otherwise, okay, it was as per the expectations, and then there will be a fall, right? It was clear. So that was okay, because of this technical chart, this a daily chart of the S&P 500. We knew that when it moves up, there will be levels, then the moving averages will also be there. Okay, so there will be very heavy resistance, and the S&P 500, without manipulation, okay, it is not possible for the S&P 500 to breach and sustain above 4425. With manipulation, okay, or with some strong this is a convincing reason, news or something, then only the S&P 500 can move up to a maximum of 4446. But no matter what, it will give up. Okay, and it did, right? Then comes the fourth and the final point of the agenda of this S&P 500 technical analysis. In the fourth point of the agenda, I will discuss the probable movement of the S&P 500 from August 28th, that is Monday, to September 1st, that will be Friday. So Monday to Friday in the next week, whatever is going to happen in the S&P 500, I will discuss that in the probable movement. Okay, so technical analysis means that through the technicals we will come to know, okay, what are the limits and all. But probable movement means this movement, okay, that it will move up and then it will come down. When come down to what levels, move up to what levels, okay, what are the significant levels, and what are these the conditions. Okay, anyways guys, there is one more thing, that I have made sections in this video, in this the S&P 500 technical analysis. Whichever section you want to watch, you can watch. Whichever section you want to skip or rewatch, you can do that. Okay, however, I strongly recommend to watch this the entire S&P 500 weekly technical analysis, because I cover a lot of things in each and every section, and that will help you to understand what is happening, what is going to happen, what will happen, and when that is going to happen. Okay, each and everything. So this S&P 500 technical analysis contains tons of valuable information. And guys, I would like to add a small disclaimer to this S&P 500 technical analysis, that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. And whether you are making 100% profits in a day or you are seeing 20% losses in a day, these profits and losses are all yours, because I do not know how you are trading and what you are trading into. So guys, before I begin with this, the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. If you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis, and this is the weekly chart. Okay, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, let's first analyze the candle itself. If you notice this, the candle, okay, it's a small bullish candle, and when you compare this small bullish candle to this heavy bearish candle, then this clearly indicates that there were bullish sentiments but these bullish sentiments were very little. Okay, very little and not significant. Very little but not significant, right? What it indicates, that whatever bearish sentiments we are seeing, okay, here back to back in these three candles, these bearish sentiments are heavy, bullish sentiments are very little. This means that even if there comes any bullish movement, means yes, there may come a bullish movement, okay, or an intraday bullish movement, but that will be normal, very limited. Rather there will be this the bearish movement. Okay, so although this candle it looks bullish, although this candle, I repeat, although this candle it looks bullish, but it is actually a bearish candle. Okay, because if this candle would have been a heavy bullish candle, in that case only we would have anticipated this the resumption of the bullish trend. Okay, or a closing above 4458. Okay, then only, but now no. Now when we look into these the technical indicators, okay, so the closing of the candle it came just above this the moving average. Okay, just above this the moving average. So what it indicates? This indicates that yes, S&P 500 might try to sustain, but that will be subjective. It may try to sustain, but now any kind of bullish movement, it will be restricted, it will be limited, it will be very limited, okay, to the levels. And what are the levels? 4425, okay, 4446, right? Simple. There are some intermediate or intermittent levels, okay, but for now, okay, you can remember these two levels only. Okay. One more thing, that on the weekly chart, moving averages are still in the this the clear fan out. Okay, this the situation. This means moving. And secondly, the closing of the candle was just like $1, only just by $1. That $1 or $1.50. Okay, S&P 500 was managed to close above. This is the moving average. Okay, so now moving averages are going to give the bullish support. Okay, but will it be bullish? No, it will not be. Why it is not going to be bullish? The reason is the MACD. This is the reason. Now the MACD has turned bearish, and this is the most important part. Okay, and the impact of this bearish MACD will not just be felt in the S&P 500, but also in the Dow Jones, Nasdaq, the ETFs like QQQ or SPY or DIA, or means you can say in the entire US stock market. Okay, because this is a very significant event that has happened on the weekly chart. Okay, earlier there was in the month of March, okay, we have seen that there was this thing. Okay, the MACD, okay, it went bearish, but then something happened. Okay, so that time it was like 3900. Okay, and it got support through some reason, and then it was able to move up. Okay, it was able to sustain, and because of that, okay, the MACD it changed within a week. However, this time the situation is different. Okay, because already there is weakness. Other than that, the candle, okay, it is also a thin candle. Okay, thin bullish candle. Okay, and it's been 3 months. Okay, after 3 months this thing is happening. Okay, so this means that the MACD is bearish. Other than that, you can notice that stochastic RSI is also bearish, but stochastic RSI is not zero. It is not zero. Okay, now considering all of the technical indicators are fine and all, so what it indicates? See, there is a rule. Okay, there is a technical rule. And what is this, the technical rule or the technical concept? Technical concept says whenever the MACD and the stochastic RSI are aligned in a particular direction, then that direction becomes the direction of the stock or the index or the currency or whatever is there. Okay, in this particular case, no matter what these other technical indicators are doing, okay, but this direction will become the direction of the stock market, okay, or the stock or the index. In this case, we are talking about the S&P 500. Because MACD is bearish, stochastic RSI is bearish. As long as these two will remain bearish, S&P 500 will see bearish pressure, heavy bearish pressure. Okay, and any reversal will be limited, rather the fall will be heavy. Okay, even though it is getting the support from the moving averages, okay, and some other factors are there, but still, okay, these will not be able to provide this the necessary support to the S&P 500. Okay, so what can change this situation? Okay, there is one thing that can change the situation, that the thing is that if there comes a heavy bullish movement next week, and if the closing of the S&P 500 goes above like 4477, okay, or 4497, okay, or 95 something, if that happens, okay, and also the open on Monday and from Monday onwards, the S&P 500 must come into open equal to low, this condition. If these conditions will be there in the next week, in that case the MACD on the weekly chart might change. I'm not confirming, but it might change, okay, back to bullish. And when that happens, in that case, yes, it will go bullish. It will go bullish to what? It will be 4527, okay, and then to 4600. Simple. But if this condition is not seen, in that case whatever bullish you are seeing, okay, it's not bullish, it's bearish. Okay, simple. So guys, I hope this thing is clear, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 technical analysis, and the second point of the agenda is the Federal Reserve Chairman, okay, the speech, and the recession and the bearish movement, okay, these things. So let me sum up, okay, this thing, okay, very quickly. So yesterday Federal Reserve Chairman, okay, he gave this a speech, okay, and in the real time I was giving these the status updates, okay, that what he's saying, okay, and what does it mean, everything, okay. The Federal Reserve Chairman, okay. Anyways, let's talk about the summary, okay. And the summary was, Feds are uncertain, clearly uncertain, okay. He has used this word again and again, that Feds are uncertain, okay, how the things will unfold, okay. And Feds cannot determine, or that Feds cannot project, because earlier, okay, they have projected something, but it did not work, okay, because of some conditions, okay, in the stock, in this the economy, okay, strong labor market, okay, some factors fluctuating, okay, and then the Russia-Ukraine war. So still, so there is a lot of uncertainty. Because of the uncertainty, Feds do not know when to pause. See, as of now, no one is talking about the rate cuts. Remember, as of now, no one is talking about the rate cuts. Rate cuts will not be there, okay. Whatever the rate cuts will be there, the rate cuts will be there next year only, okay. So as of now, whatever the interest rates is, okay, it is there in the economy, okay. For example, if you are going for any kind of loan, okay, a car loan or a home loan or any kind of loan, okay, then you will see that interest rates are 2x or 3x, okay. You are paying 2 times or 3 times, right? So this is actually, okay, what the Feds are doing, okay. By raising the interest rates, they are simply slowing down the economy, and this is what they do, okay. Anyways, Feds are uncertain, clear. Feds will raise the interest rates again if economic data goes against. Recently, we have seen there was a reversal in the headline inflation, okay, reversal in all of this, the economic data, okay. Even though Feds have raised the interest rates again and again, but still the inflation is holding, okay. It is still not coming under control, okay. And while many, okay, analysts and many people, okay, they are saying that interest rates will hit 2%, okay, this year. No, even the Feds have projected that 2% interest rates will be achieved by the end of 2024 or in the first quarter of 2025, okay. And they have their tools, machinery, and people, and they know, okay. So 2% this year, okay, that is not. Headline inflation is different, okay. Feds are talking about the core inflation. Core inflation is still, okay, it is like 4.5%, 4.4% something, okay. So there is a minute change in this, the core inflation, but the headline inflation indicated that the core inflation can still go bullish. Then the things are not working, okay, as per the expectations of the Feds. Okay, Feds were expecting that this will happen, that will happen, economy will slow down, okay, and everything will come under control, but nothing is happening. Feds project, okay, that this will happen, but that thing doesn't happen. Okay, that is why it is bringing more and more uncertainty, that Feds do not know, okay, when to pause. That is why they are raising the rates again and again, and they will keep on raising the rates until and unless they are certain that, okay, now the things will move as per the expectations, right? Now okay, below trend growth for a significant period of time means recession. Indirectly, they have confirmed the recession in all of these Federal Open Market Committee minutes of the meetings. Okay, recession is used, that recession will be there. So now Feds are saying the recession will be there, it will be there. Recently, whatever, okay, data and whatever we have seen, okay, that is all indicating the recession will be there. And one more thing, guys, let me remind you again, okay, recession was delayed. Recession was delayed. There was a delay. Recession was delayed because of the strong labor market, but recession was never cancelled. Okay, so those who have questioned again and again, okay, or who are saying that recession is not there, it was over and all. No, you need to understand that how the stock market works, how the economy works. Okay, if you are following a news channel, and if the news channel is saying okay recession is over, no, okay, so you must analyze okay things by yourself. Okay, and rather than following the news channels, okay, you should stick to these institutions like Federal Reserve, okay, the US government, okay, itself. When the government is saying the recession is there or recession will be there, this means the recession will be there. These, okay, whatever the news channels are saying, okay, that is not true, right? So now the recession will be there, okay. And the final point was hawkish comments, clearly hawkish comments, and the US stock market will follow its bearish trend. There is no change, okay. And what we have seen that it went bearish, okay. So when I published this thing, okay, after, so that was around 10:30 a.m. Okay, so 10:30 a.m. it was clear that now it will remain bearish, okay. And we have seen that it went down, it further came down, it came down to 4356. And what is this, the 4356? Okay, it was the support level, it came down to 4356 reversal. But any reversal, okay, it was supposed to be restricted, limited restricted to what? 4396, 4396, and then 4412. So guys, if you are looking for these, the daily updates, the daily analysis of the S&P 500 from Monday through Friday, and you want to know the true picture of the stock market of the S&P 500, then you can join my Patreon community. Let me tell you that how you can join my Patreon community. So guys, there is one more thing, okay, that you should understand, that I gave these the daily updates, the daily analysis of the S&P 500 from Monday through Friday. That is one thing. Other than that, I gave these the stock market opportunities in the premium stocks of the US stock market. Okay, so once in a week, minimum 5 to 10 opportunities. This in the premium stocks, right? So guys, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. So when you follow that link, then you will see that this is my Patreon page. And on my Patreon page, there are these the two levels. Okay, these two levels are same. There is no difference other than the geographical location. Okay, so this one is for non-US and Canada residents, and this one is for US and Canada residents only. Okay, so when you subscribe to any of these, okay, then you will get the daily updates of the S&P 500 from Monday to Friday, and also the stock market opportunities in the premium stocks, minimum 5 to 10 every week. And guys, if you see that many people have joined my Patreon community for last many days, weeks, months, and they are getting these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything. And I give these the pre-market update, the first, second, third, fourth update, the final update, and everything. And I make my Patreon community members aware of what is happening, what is going to happen in the entire US stock market and the S&P 500 even before the things happen. So guys, whenever you want to join my Patreon community, please feel free to join. I have given the link in the description of the video and also in the comment section. And for those who cannot join my Patreon community for some reason, still you want to know and still you want to learn, okay, about these things, then now I have made this the section daily S&P 500 analysis and updates, okay, on my website. I have given the link in the description of the video and also in the comment section. You can visit my website and you will find all of these the updates and all of these the information that I have shared with my community members, with my Patreon community members. And you will see that there are hundreds of these posts every day. Okay, I give these opportunities, these information, okay, tons of valuable information to my Patreon community members. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis, and the third point of the agenda is the S&P 500 technical analysis on the daily chart. Okay, this is the daily chart. Let me write it down, daily chart. Okay, now daily chart means that the one candle represents one day, okay, not 1 hour, okay, or 1 week. One candle means one day. Let's first interpret the candle itself. Okay, if you look into this, the candle, it's a green candle, but when you look into this, the candle, this is a very heavy red candle, very heavy bearish candle. See, in order to analyze, okay, this thing, you need not to be that much of technical. You can clearly see it's a heavy red candle and it's a small bullish candle. This means that the red sentiments are there. Simple. Okay, now why this candle is filled with the bearish sentiments, now that is the technical part. Okay, now notice this candle. This candle, okay, it formed on 27th of July. Okay, what has happened is that this candle has engulfed these three candles. Okay, it was a heavy red candle. Next day we have seen a bullish movement, green candle, right? But this green candle failed to clear the open of this the red candle, right? Then again next day we have seen another bullish candle, again it failed. And then what happened? This thing. Okay, and this thing is what, and this thing was how much? 5%. Okay, and if you notice that in this the video, okay, in this particular S&P 500 technical analysis I mentioned 3% to 5% fall will be there. Okay, if this condition is there. Okay, this condition was there and we have seen 5% fall, right? So technically, okay, we can predict, okay, movement, we can predict the fall, and okay, these things. Intraday things may change a bit. Okay, things might not be that much of 100% accurate, but still we can like 80%, 90% we can get that much of accuracy. Anyways, I was talking about this thing. So what has happened? It has engulfed these three candles. Next day a bullish candle, okay, bullish, and then fall. Two candles, absolute bearish engulfing. Two candles, and this is absolute bearish engulfing. Okay, next day came down, moved up. Okay, it was engineered to close this way. When I say engineered to close, yes, because it was not supposed to move up beyond 4396. That is why it was engineered to close this way to bring more volume, okay, bullish sentiments, okay, and to tell others that see the stock market and the S&P 500 is still bullish. Okay, it was engineered that way. Okay, but this is not bullish, right? Yep, so I was talking about this candle. Now green candle, okay, notice green candle, okay, after the engulfing, right? This means that as long as S&P 500 remains below what? 4358. 4358, sorry, my handwriting. 4358. Okay, if the S&P 500 fails to clear 4358 by Monday and maximum by Tuesday. So if it fails to clear 4358, okay, on Tuesday, in that case, okay, resumption of bearish movement, as simple as that, right? I will talk more about this in the fourth point of the agenda, that is the probable movement of the S&P 500, right? Let's stick to the technicals. Okay, so technically what we can see is that technically, yes, moving average is clear fan out, okay, in the bearish, okay, and all of the technicals are bearish and all. Anything important? Or stochastic RSI is bullish, and because the MACD is bearish, stochastic RSI bullish, okay, they are simply cancelling the effect and impact of each other. Okay, otherwise still, okay, it is bearish. So what we will say is that the S&P 500 is 70% bearish on the daily chart. Simple. Through all of the technical indicator, it is 70% bearish. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, once again, if you want to learn the more technicals, the technical analysis, if you want to learn how the stock market works, if you want to predict the movement, okay, in advance, then you can participate in my S&P 500 knowledge transfer program, or you can say this is the stock market knowledge transfer program. Whatever you are going to learn here, it is applicable to all of the stocks, indices, okay, even to Bitcoin also, okay, currencies, everything. You will learn the movement, predict how to predict the movement, okay, some stock market hacks, strategies, trend analysis, okay, when okay, this identify manipulation, technicals, all of the technicals, predictions, support and resistance levels, and everything you will learn. Okay, and this is the link to my Google spreadsheet. Okay, if you want, or if you need more information, okay, in very detail, then you can follow my Google spreadsheet, and when you open the link, then you will see that what exactly is covered in very detail. Okay, what I've covered, okay, and this thing. Other than that, okay, one session, other than that, the terms and conditions are there, and this is okay. So many people have already participated in my S&P 500 knowledge transfer program, then they have already gained a lot of knowledge here, right? So guys, I have given the link in the description of the video and also in the comment section, and this is my email address. Okay, whenever you want to participate, you can simply send me an email. Okay, or if you have any questions, then you can drop me an email. This is my email address. Now guys, I'm going to discuss the fourth and the last point of the agenda of this S&P 500 technical analysis. And this the last point of the agenda is the S&P 500 technical analysis from August 28th until September 1st. Okay. So until September 1st, whatever is going to happen in the S&P 500, and not just in the S&P 500, but in the Dow Jones and in the Nasdaq, in the QQQ, okay, and all other ETFs, and in the entire stock market, in the entire USA stock market, okay, I will discuss here. So next week, okay, two things that can heavily influence the movement of the entire USA stock market. Okay, it will be Thursday and Friday. What is on Thursday? On Thursday, this is the PCE and core PCE. Okay, this data will be published. Okay, and as you are aware of this thing, that the PCE and the core PCE, okay, it is the critical, okay, this economic data, because Feds consider, okay, this data when they think of whether to raise the interest rates in the next meeting or not. Although for now we have seen that all other economic data, it was bullish. Okay, means economic data bullish means the stock market is bearish, right? So if there comes the PC and the core PC data, okay, that says that inflation is still holding, then definitely, okay, as of now there are 65%, okay, and yes, yesterday, because the Fed chairman has confirmed, so that is like, 75% confirmed that the Feds are going to raise the interest rates in the month of September. Okay, if the PC and the core PC data comes, okay, again, this it means if it supports the inflation, then definitely there will be 100% confirmation Feds are going to raise the interest rates in the month of September, and also they will think about raising the interest rates again in the month of October, right? Now, okay, this is one thing. On Friday, the non-farm payroll data will tell us, okay, whether the labor market is strong or not and how it is doing. Okay, these 2 days are very, very important, but particularly Thursday is very important. Okay, PCE and core PCE data, it will be published at 8:30 a.m. Eastern time, US and Canada. Okay, US and Canada Eastern time, 8:30 a.m. It will be published. Okay, and in my pre-market update, I will analyze the data, and I will tell you, okay, that what we are going to expect, okay, through my pre-market update, and whether there will be any trap or not, okay, what kind of movement, and accordingly you can make changes to your trades. Okay, so this is the most important part for the next week. Okay, now let's talk about the probable movement. Okay, so in the previous section, okay, in the daily in this that was the S&P 500 technical analysis on the daily chart. Okay, I've clearly shown you this thing, okay, that because of this the bearish engulfing, this thing has happened again. Because of the bearish engulfing, this thing, okay, so I've already discussed this thing in detail, okay, in the previous section. Now, so what it means, okay, so let's begin with the okay, 4458. Okay, so as long as S&P 500 is trading below 4455, okay, 4455 was the open of this candle, okay, and 4458 was the high of this candle. Okay, so now as long as the S&P 500 is trading below 445558 and it is closing below 445558, it will remain bearish. This is a green candle, but it is filled with bearish sentiment, similar to something what we have seen here, right? So this is your bullish movement. It is going bullish. No, it is not going bullish. It will go bullish only and only if it is able to sustain above 4458 and 4455. That's it. This is the simple thing. So now bullish side is clear, that the S&P 500 may go bullish only and only if it is able to sustain above 445558. But question is that what is after 4455 and this 58? What is there? Okay, there comes the boundary of the Ichimoku cloud itself. Okay, see, for those who are non-technical or who are not aware about the Ichimoku cloud, okay, it's Ichimoku cloud, okay, it's a complex thing, okay, very complex, but at the same time it gives us, very critical, very important, okay, very accurate results. Okay, so for you, okay, the boundary of the Ichimoku cloud, it acts as support and resistance for the S&P 500, for the Dow Jones, for any stock, for any index, for any currency, for everything. Wherever you apply the Ichimoku cloud, the boundary of the cloud will act as the support and resistance itself, right? Now, okay, I was discussing this thing. Okay, this means that if it wants to move up, then 4477. Okay, that is again, yeah, 4477 is the boundary of the Chimu cloud, as well as this is my calculated resistance level. Okay, perfect combination, and this will be heavy. See, if a technical indicator is acting as a resistance, and at the same time my level is also there, then it becomes very heavy. Okay, means if it is the resistance, then this will be very heavy resistance, and most likely the S&P 500 will fall, or highly likely the S&P 500 will fall. Okay, just like what we have seen on Thursday, it moved up to 4455. Okay, what is 4455? That is this is the calculated resistance level beyond 4446, right? So it was already heavily unstable, it gave up, right? Anyways, 4477. Okay, now let's say so next week will be up to this, and this. This means that if the S&P 500 is able to sustain above 4455 or 4458, if it is able to sustain and close above, in that case, and it goes bullish, then it is allowed to go bullish up to 4527. 4527. Okay, but for it to happen, for the 4527 or 45xx or 4496 to come into the, or 4497 to come into the picture, okay, the technicals must also support the bullish movement. When I say technicals must also support, I mean there must come a crossover in the moving averages. We have seen a crossover here in the moving averages, and that this was the beginning of the true bearish movement, right? Similarly, a crossover in the moving averages must come, so that there must okay, we can trust the bullish movement, and then the S&P 500 may reach to 4527. Okay, without crossover it can move up to a little, maybe like 4477, 4458 or so. Okay, but as of now the situation is that it will struggle a lot. Okay, only or most likely on Thursday, okay, when the PCE data will be published, if the PCE and the core PCE data comes in line with the expectations of the Wall Street, when I say in line, means if it indicates that the inflation is further going to cool down, okay, then the stock market will get a bullish reversal, a bullish push. Okay, then that can help the S&P 500 to breach the 4455 and 4458 level. Okay, but as of now what I'm talking about, or I'm talking about this thing, is that if the S&P 500 is able to sustain above 4455 or 58, then what will happen the bullish side? Okay, that is what I'm discussing here, right? But again, remember, do not forget about 4455 and 58. This is the strong barrier. Without breaching and sustaining above this level, S&P 500 is not going bullish, even though it might show that there is a green candle on Monday and a green candle on Tuesday, but both of these candles are still below these the levels. Then what will happen? Immediately on Tuesday or Wednesday there will be a heavy fall, right? Because the bearish trend is still there. The true bearish trend is still there. Okay, now one more thing, okay, I want to show you here, and this is the Dow Jones. Okay, without Dow Jones, okay, we cannot accurately predict the movement in the S&P 500. In case of Dow Jones, what is happening is that Dow Jones is very near to its 200-day EMA. Okay, this is the 200-day EMA, very near, and there is very heavy bearish candle. Okay, then this the bullish candle, it failed to clear that thing. Okay, what it means? This means that Dow Jones is heavily and highly susceptible for a fall up to its 200-day exponential moving average. 200-day exponential moving average is like 33,760 or something. Okay, and as of now any fall from this level to this level will be 1.5%, 1.5%. This means that if there comes a fall in the Dow Jones, then S&P 500 is not an exception. It will have to follow the Dow Jones, right? That is why I was saying that in order to get an accurate movement in the S&P 500, we must also look into the Dow Jones. Okay, this is one part. Other thing is, okay, if you notice in the Dow Jones, that Dow Jones was already trying to sustain here, but it failed. Okay, 1 2 3 4 5 days, 4 5 days it was trying to sustain here. Okay, okay, around here, but it failed. What it means? It means that now it is going bearish. Simple. What can help the Dow Jones to sustain? The boundary of the Chimoku cloud. This means on Monday the Dow Jones, okay, if it goes below 34,035, in that case highly likely it will be moving towards this the 200-day EMA. Okay, when this thing happens in Dow Jones, then the S&P 500 will give a bearish movement, no bullish movement, right? And if you notice, okay, that yesterday the Dow Jones, okay, it was trying to move up. Why it was trying to move up? Because it was trying to sustain above its the level, this thing, okay, this thing. And because it was trying to sustain above the level, then we have seen, okay, a bullish reversal in the S&P 500 also. Okay, but technically it was not supported, but because of the Dow Jones, okay, it happened. And the same I mentioned in my second update to my community members, to my Patreon community members, that see the Dow Jones will try not to breach below 33,980, because a movement below 33,980 means more and heavy selling, right? And this is the first time the Dow Jones was coming. Okay, this was normal. So we were not expecting, yes, a hit to 33,980. Okay, it was expected, and it only by 40 points. Okay, so Dow Jones, okay, it saved itself. It gave an intraday reversal. That reversal, okay, impact that the rubbing effect, it came in the S&P 500, right? So this thing is clear. And yes, there is one more thing in the Dow Jones, and that is that the MACD is still bearish and the stochastic RSI is very weak. It is trying to go bullish, but it is very weak. Okay, so Dow Jones is more bearish as compared to the S&P 500, and you can say that the Dow Jones is like 90% bearish. 90%. S&P 500 is 70% bearish on the daily chart, but the Dow Jones is 90% bearish on the daily chart, right? Secondly, it has failed to sustain here. This means it is more prone, or it is highly susceptible for this the fall, right? Now okay, now comes this part. Okay, yep, S&P 500, we were discussing this thing. This means that chances of seeing a movement beyond 4455 or 4458, okay, are less, but it cannot be denied, right? So and then this is the movement, okay, beyond this thing. Now what is there in the other side? Means what is there in this the bearish side? So in the bearish side, okay, again this the logic is simple. If the S&P 500 remains below 4455, okay, as we are expecting that it will be because of the engulfing, this is the same thing, and we have seen here it will remain below 4455. Okay, means a bullish reversal, okay, it might be seen or it might still be there. Okay, but a movement beyond 4455 or even up to 4455, it might not happen. So if you think that, okay, it is moving up, it will hit 4455, no, not necessary. Okay, because we have 4425. Okay, the S&P 500 must respect the 4425, and now because the S&P 500 failed to sustain above 4425, this means that it will be really very hard, very difficult for the S&P 500 to sustain above 4425, right? So we have 4425, so it's not that easy to reach to 445, and after 4425 then we have 4446, right? Intermittent, we also have these are very strong levels, very strong levels, okay, that are there on the 4-hourly chart through the moving averages. Okay, so we must not forget that. This means that now we can expect a reversal, but any kind of reversal will be limited. And secondly, last week I mentioned that 100% there will be a bullish reversal. It was confirmed. I was that much confident that 100% there will be a bullish movement, a bullish reversal. This time I'm not saying that 100% there will be a bullish reversal. There may or may not be, because the trend is still bearish. This is a green candle filled with bearish sentiments, right? But what I'm saying is that as of now, any movement, okay, in the bull side, it will be limited. It will be very much limited, not just limited, will be very much limited to these are moving averages. It will be limited to these are moving averages. On Monday the moving average will further come down and the value will change. Okay, so I will mention this thing, okay, in the first update, okay, on Monday. Now so this means that any bullish reversal will be limited to this moving average, as simple as that. Okay, no rocket science. Now when you see that it is struggling, okay, most likely it will struggle, okay, at this the moving average. Historically we have seen that it tried to move up, okay, there is a struggle, came down, moved up, came down, moved up, came down. Okay, if it struggles at the moving average, done, it will come down. Okay, but if it manages, in that case 4425, the level itself will come into the picture. Okay, and this thing. Now any bullish reversal and then a downward movement, simple. Okay, this kind of movement. But in the bearish side there is a catch. The catch is that the S&P 500 will try to hold and sustain above 4340. Okay, because this will be the first time the S&P 500 will be coming down, and the Chimoku cloud will act as support for the S&P 500. This means 4340 is the level where we can say that S&P 500 will be a little reluctant, hesitant to clear, to breach below 4340. Okay, because when it does, in that case there will come more selling, more and more selling, heavy selling, right? This means that it can come down to 4340, it can sustain, and then again it will try to give a bullish reversal, but again it will come down. Okay, this is how it is going to work. Now when the S&P 500 gives up 4340, then what will happen? In that case it will see more fall, and now the 200-day EMA for the S&P 500 is around 4225. Okay, so this means that then then there will be very good chances that in the coming days, not immediately, not intraday, but in the coming days, okay, S&P 500 will be moving towards 4225. Okay, but before 4225 there is still, okay, a lot of support for the S&P 500. So now as soon as it gives up 4340, then what will come into the picture? 4312 and 4291. Okay, now what is the 4312? This is the 61.8% of the Fibonacci retracement level. 4291 is my calculated golden support, or earlier it was golden resistance, but now it is going to act as a golden support. This means as soon as it comes down, it will come down to 4312 and 4291. It will hit, and then only it can try to sustain. If it gives up 4291, then 4265. Okay, in between 4291 and 4265 it can see a reversal. But now as soon as it gives up the Ichimoku cloud, it closes below the Ichimoku cloud. Okay, it comes down, finds support, and it gives a reversal. Any reversal will be limited to 4291 itself at first, otherwise it will be limited to 43. 43, how much is that? This is the level in the Ichimoku cloud. This is 4355. 4355 level. Any reversal will be limited to 4355 simply. Okay, so now I hope this thing is clear. First of all, you must remember that the movement, the direction is what? Direction is like this. Okay, this is the direction, right? Means upward movement will be there, a retrace will be there, but that will be seen as an opportunity to go bearish, right? Secondly, for the S&P 500 to go bullish, it must hold and sustain above 4455 and 4458, then only it can. If it remains below, in that case 4425, 4446 and the moving averages themselves, okay, will act as the point of reversal. It will come down. Okay, whenever it comes down, it will try to find support at 4340. As long as it is holding above 4340, okay, until this level is there until Wednesday. From Thursday onwards it will be 4355. Okay, so as long as it is holding above, okay, these are levels, fine, it can still try to sustain. But once it gives up these are levels, closes below the Ichimoku cloud, okay, in that case it will go more bearish. More bearish means it will be heading towards 4312 and 4291. 4291 is the level, okay, it will be looking for, because that is okay, it is going to act as a magnet. Okay. So it will simply attract the S&P 500 towards itself, 4291. It will be coming, the S&P 500 will be coming towards 4291. Okay. As now, once it reaches to 4291, now this is the place where it is going to find the support. Okay. Now around at 4291 or around 4291, okay, then it will see 4291, 4265. Okay, and this is how, okay, this thing is going to work, right? So guys, there is no rocket science to understand this movement. Okay, yes, intraday things will change when the S&P 500 comes into the session. Okay, but for that, okay, I give these the updates from Monday through Friday, daily updates. Okay. So these updates, okay, clear the doubt, okay, what is going to happen and what will happen, everything. And so if you have not yet joined my Patreon community, then you can join my Patreon community, and you will get these daily updates, the daily analysis, more numbers, okay, logical movement and everything. And if you want to self-sustain, if you want to self-reliant, then you can learn the movement, the technicals, the analysis, everything, and then you'll be able to predict yourself, and you'll be able to calculate everything yourself. Okay, so you can participate in my S&P 500 knowledge transfer program, or this is the stock market knowledge transfer program. I've given the link in the description of the video and also in the comment section. And if you have the capital in between this thing, okay, $500,000 or $5 million, then you can participate in my program, and I will give 20 to 30% returns in 1 year. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel, and hit like if you have liked this video. And if you have any questions that you want to ask, either you can drop me an email or you can ask the questions through the comment section. So guys, once again, this S&P 500 technical analysis is applicable until September 1st, 2023.